My colleague Heidi just pointing out that, of course, you got that majority stake back towards the end of November of last year. What has that been able to do in terms of change your priorities? How have you able to freed up to make the decisions, the kind of decisions, business decisions, that you weren't able to make prior to that?
Well, first of all, thank you very much for the question. First of all, we were running as the sole manager of the UBS Securities ever since 2007. However, our economic interests were kept at 25% of the firm. Now we're able to say we majority own the firm, which is a full license, first foreign manager firm, become a first foreign majority controlled full license security firm in China. That means a lot to us, i.e. our interest, the group interest, UBS's interest are aligned. Our domestic shareholders' interests are totally served by this commitment, a renewed commitment from the group and also by UBSS itself. So we're ready to go. We're going to, over the time, gradually increase the capital. We'll focus on traditional business of underwriting and also advisory, cross-border. We're also going to potentially seek ways to do more local brokerage business, which has the capital-intensive nature, such as share financing, such as equity derivative, etc., etc. That's where international firms like ourselves, with the balance sheet offshore and with the expertise we accumulated through global businesses practices, are able to bring to China. So we are very hopeful that we will be the first one to kickstart a new phase of expansion for UBSS in China.
And you've added headcount, about 600 new employees over the last couple of years. Where exactly are you diverting that headcount? Which parts of the business, which divisions are you specifically adding headcount to at this stage?
As our group leaders announced now more than 2-3 years ago, we're going to double the staff in China. By that, we meant we want to expand all three key businesses in China. That is investment banking in UBS Securities, but also wealth management, the world-leading business of UBS Group. To your question, many of those headcount you're mentioning are into those both business, plus the asset management business, which we set up a new entity in Shanghai Free Trade Zone, and we're going to expand AM as well. And then finally, with the front office expansion, we also need to increase the headcount in mid office and back office. So Business Solution Center, which is wholly owned subsidiary of group in China, in Shanghai, are also adding on hundreds of staff to support the global and also China businesses to expansion.
Are you looking to raise capital? And if so, would that be via a private placement or potentially an IPO?
Well, I think when we say increase capital, we are exploring ways. For example, for UBS Securities, that would be agree with all the shareholders, including our group and also Chinese shareholder, through a shareholder capital, cash capital injection or cash call. That way, we think is the most optimal way at this stage of the firm's development to increase the capital.
And do you still buy into the pledge that Chinese policymakers have made to allow full ownership of financial institutions here in China within a 3-year time frame?
The rules are very clear based on our understanding and latest communication with us from the Chinese regulators. Come January 2021, all the foreign firms which has been held 51% for 1 year, 2 year, whatever, are able to apply to go up to the 100%. However, what a regulator cannot force is the Chinese shareholders, the domestic partners of these foreign firms, who may or may not agree to the right how to sell. That's why you see some of our friends from the international firms are exiting before they can re-establish new type of JVs. I would like to say we were lucky because the shareholders we have, the partners we have in UBSS from the beginning are not those from the same industry as Group is, i.e. non-security firm shareholders in China, which made it much easier for Group to increase the capital, increase the stake in UBS Securities. And going forward, that shall remain the case.
Which parts of your business are facing the most pressure given the economic headwinds in China now?
I think we are very nimble and very careful about the business expansion planning when it comes to executing it. We see in the short term some uncertainty on the capital markets front. We have also seen some drop in the volume in the cross-border M&A. However, people should remember 2018 is still the third largest outbound M&A year for China in the recent decade or longer. So from that standpoint, we see some short short-term uncertainty and headwind, but we are cautiously optimistic. If 2018 was a relatively low year with a low level of economic and capital market activities, 2019 could pan out to be a bit better than people think at this moment of the time.
In terms of the stimulus, I know your team are expecting, as many are, additional tax cuts, potentially corporate tax cuts, and of course an increase in infrastructure investment. And your team, I think, are predicting an increase of around 10% in 2019 in terms of fixed asset investment. The problem many would point out is that the corporate tax cut may not be passed on, as indeed it wasn't, it seems, in the US, and the infrastructure spending, there are fewer investment-ready infrastructure schemes available for China's policymakers at a local government level. Do you share those concerns? And if that's the case, does it essentially mean that they've got less bang for their buck when it comes to these stimulus measures?
Well, I would say your first part of the question, the corporate tax cut, is not across the whole corporate sector. It has been focused on those preferential tax rates and cuts being focused on SMEs, the small, medium-sized enterprises. You're right. Those are private sector companies who were lacking investment desire. So to the extent that the tax cut comes through, and if they become a little bit more bullish, and while they are helped with a little bit more cash flow to be able to preserve, the likelihood of them reinvesting in the business more likely. So those may or may not directly translate to the consumer spending necessarily. However, as these people reinvest and expand the business, they will hire more people, increase the salary, which, by the way, the individual salary tax allowance, if you like, are helpful from that standpoint. Comes to infrastructure, what we see is, yes, there are two broadly types of infrastructure. For tier one city like Beijing and Shanghai, we're still building, overcrowded airports, not sufficient subway station. It's true in both Beijing and Shanghai. So expansion in these tier one cities are literally answering the demand, increase the demand. So these are, if you like, solid, bankable projects that the government recently approved in the hundreds of billions of RMB worth. And then in a more remote area, third tier, fourth tier city, China has this saying, in order to get rich, you got to build a road. So there is an element of government-led, investment-driven infrastructure in order to hopefully support the local economy, but hopefully pulling out of the local economy out of the necessarily slow down. Now, some of this infrastructure are more to facilitate the local growth, so initially may not generate sufficient cash flow. That's why the government sponsor or the state development banks supported the infrastructure are also valid, but slightly different category.
And in terms of the trade war, the talks, of course, are ongoing now in Beijing at a lower level. But it seems positive. Liu He attended one of the meetings we've heard. There seems to be a view, and your team as well, suggests that you're at least going to get a continuation in those negotiations, if not a big bang bargain at the end of all of this. But your clients presumably have to prepare for a longer-term prospect of just increased volatility between certainly the US and China. How do you navigate that? How do you advise your clients facing up to that issue?
I think, as you rightly point out, talking is better than not talking. So we are reasonably hopeful that something will come out of the end of the talks, say by end of March, or if the talks still having a positive momentum, the likelihood of extending the deadline slightly is also very possible, but all within, say, first half or later part of this year. We are advising our client to be nimble and be careful and to prepare maybe for something, as we call it, before things get better, can good in the short term get a little bit worse or as bad. However, in the medium to long run, i.e. towards the second half of this year or going beyond, the likelihood of some kind of a deal is very likely. So we are cautiously optimistic a deal will be done.